We have transactions, we have a trial balance, and now we're ready to start creating statements. So the proper sequence is to start with the income statement and then go to the balance sheet. And the reason is we use the net income as part of the balance sheet, right? So let's just do it that way. And you're going to find that I'm not going to do a lot of extra work here. I'm just going to refer to numbers that we already derived from all the hard work we did before in transactions and trial balance. What's the revenue? Well, the revenue is right here. It's a column, and this is the sum of all those lemonade bottles we sold, 5,500. What's the cost of goods sold? Well, the cost of goods sold is the sum of everything in that row from the various transactions. So it's negative 3,000. So our gross profit is 5,500. Again, I'll just do it from scratch. So it's the revenue minus the cost of goods sold. Now notice I entered plus because the cost of goods sold was entered as a minus. So plus a minus number is minus. So that's why we have 2,500. Then we had commission expenses. So I'm going to hunt back up there and say, oh, how much in commissions? Right there. And then we have rent, which is right there, $500. And then we had salaries, which is right there, $800. And the sum of that is $1,525. And we now have net income of $975. Now this is greatly abbreviated because we had no income tax, we had no interest expense, etc. I'm just ignoring interest here. Just to illustrate that we have transactions, we have a trial balance, and we generate statements, right? That's what I'm showing in a pretty abbreviated way. So let's now do the balance sheet. Cash, that's simply saying plus that number, which we worked to get that correct. Accounts receivable, hang on, let me just make that wider. So accounts receivable, the net is this. The inventory is the net of this after all the buying and selling of inventory. So the subtotal of current assets is 206. And what do we have in PP&E? The net is this number, 1,000. So now we have 207,200. Notice that these numbers are the same, so we're in good shape. Then the next section is accounts payable. Again, plus, and we point to the number. And then accrued expense plus, point to the number. So the subtotal of current liabilities, the sum of those two numbers. And then the long-term liability is 5,000. So we have total liabilities of 6,225, common stock, when we sold our stock for 200,000. And then we retained earnings of 975. So now we can do the total liabilities and shareholders' equity. Total liabilities is this number plus the amount of shareholders' equity of that number, total 207. So notice these numbers are the same. So our balance sheet's in balance. So what have we just done? We posted transactions, we generated a trial balance, we generated an income statement, and then we generated a balance sheet. Now you say, well, there are four. I could go and then analyze from those transactions, summarizing those transactions in a slightly different way to present the cash flow and to present the changes in shareholders' equity, right? But there's no new transactions. Every transaction we would need for any of the reports have already been entered in the system because we were very meticulous in recording all the transactions so that we could generate a proper income statement and a proper balance sheet. Okay, that's it for the Excel exercise. We'll be doing this again when we get together in class, but this is an introduction to the accounting process, again using the spreadsheet or template method. Now let's go back and wrap up our intro to accounting. Okay, so we're back to our slides for the intro to accounting, and we, instead of using a screenshot, we went to Excel and did the actual posting of transactions, and we ended up with this. We ended up with a filled out template where we have all the transactions here. We have a trial balance here in the orange row, and then we have our first statement here, the income statement, and our second statement here, the balance sheet. And the end result was that we had posted transactions and we had 2 of the 4 statements generated from this highly simplistic example of a handful of transactions. So summarizing how accounting works in 30 minutes is that the financial statements provide valuable information about the financial health and profitability, and we have procedures and standards which become the language of business. So companies have a lot of stakeholders of whom they have an interest in this information. We gather information about the transaction, then we record them into an accounting system, and then we summarize those results into statements. The two most commonly used accounting statement measures are financial position, which is the balance sheet, where assets equals liabilities and shareholders' equity. And the second is financial performance, as illustrated from the income statement, where profit equals revenues minus costs. And then we used a very simplified form of accounting, a template method, to illustrate the process of accounting and reporting. So overall, accounting is a structured way to provide reliable information on a company for management and other users.